So let's see the simple strategy. A simple strategy of a break of structure, retracement, and a continuation. So we have this zone. The first zone is here. The second zone is here. This is supply zone, and this is the demand zone. Okay, but before the continuation, there is a break of structure to the downside here. So after a break of structure, we expect the market to do a retracement and then a continuation. So we take a Fibonacci retracement. We are drawing from this area, point A, before the market start to pull back, and to make a break of structure to the downside. So we draw from point A to point B, and then we consider 61.8 as the highest retracement level. Okay, and from here we see there is a consolidation, and then there is a confirmation. This wrong bearish candle, as we see here, and they're also moving average equals. So after those conditions, so we are going to take a sell from here, stop loss above this area, and then we target this area downside here, and as you see, profit target hit. So this is a simple method that you can use. It's called a continuation. It is simple, and you can use it if you are a beginner and even intermediate to take an end. It is simple as you see.